Today we are going to start a financial statement analysis for taxation. This is our 301 part A. Here 50 marks. So in here our syllabus. So in this paper we have chapter or 5 module, we can say. Number 1, financial analysis for business analysis valuation using financial statement. Then analysis of source of finance with share and loan capital. Then analysis of capital structure, cost of capital, working capital, management accounting, and for international accounting standard 12, IF12 for taxation purpose. Analysis of capital investment appraisal for taxation purpose with residual status, and analysis of that means tax computation. So basically all are related to the income tax, because company and first if we see the first module, we have to establish a company, and that company collects money for running the business through the module 2, and module 3 there are a lot of source of finance, taxation, etc. Module 4 and capital investment, that means we know is capital budgeting type item, and then we will analyze the taxation. So this way we summarize this paper. So if we go for today, framework for analyze business analysis valuation using financial statement. In our this module, you will see the overview of financial statement, qualitative characteristics of accounting information, determination of maturity, analyze and different types of item, pure ratio analysis, common size financial statement analysis, vertical analysis, horizontal analysis, etc. Method of financial statement analysis, etc. If we see here, framework analyze business analysis valuation using financial statement in our corporate finance and everywhere here, we have to manage the finance, and financial management is the component. It's have the 3 component. One is investment decision, financial decision, and dividend decision. And investment decision depend on capital budgeting and working capital management, and capital budgeting for the long term, more than 1 year, and working capital management is the short term, within 1 year, so for operational purpose. And financial decision also depend cost of capital, that means how much cost for bringing money for running the business. If you go to bank or taking the loan at this moment, fixed is 9%, but previously it was 12, 13 or 15%. So how much cost? The cost of capital is the vital part, and capital structure also. For example, capital structure. We know our capital is loan capital and equity capital. Both are the capital, but equity capital, equity owner is the real owner of the company. But loan capital is just like loan, have to pay the interest. So structure also depend organizational financial management. Structure, that means if you go to for bringing the loan, or your capital structure, if 40% equity, 60% loan, one structure. Another 50% loan and 50% equity, another structure. Sometimes in the power company, they have the when go for establish a project, they are taking 30% equity, 70% loan. So that type of structure also manage or depend on financial decision, sometimes leverage also, and also dividend decision. So there are different types of dividend policy organization use. Sometimes we have seen that cash dividend, paying the cash dividend on a stock dividend, and that policy, few companies, they establish the zero dividend policy. For example, if 50 crore is net profit, if that amount they establish another unit for the expansion, they keep that amount, so that type no dividend pay by the company, so is the zero dividend. And sometimes fewer fixed dividend, sometimes the percentage of that means 10%, or sometimes fixed, sometimes is a residual policy. Residual policy means that 50 crore net profit and need establishment for the 40 crore, so remaining 10 crore have to distribute to the shareholder as a dividend, so that 10 crore is the residual amount, so that's also the dividend policy, residual policy. And sometimes retains earnings. So how much what is the retention ratio? We know the dividend payout ratio. That means if dividend payout ratio 70%, then 30% retention ratio, because have to retain within the organization. So that type of decision through the dividend policy. So here we have seen that investment decision, financial decision, dividend decision is the vital part of financial management. So as an professional, as a finance guy, as an tax practitioner, we have to link each and other item. And another thing, though we are in tax practitioner, though we have to understand the financial statement. Organization, they are preparing financial statement. So it is true that financial statement prepared by the management, not by the auditor. Auditor only certified, and financial statement is that is governed by the financial standard. We know international accounting standard, also international financial reporting standard. So sometimes what is the difference between IS, international accounting standard, and international financial reporting standard, IFRS? So basically IS, IFRS the same, because from 1973 to 2000 there was a committee, International Accounting Standard Committee. That committee produced the standard, International Accounting Standard. That standard from 1 to 41. And in the year 2000, that committee turned into board, International Accounting Standard Board. That board produced the International Financial Reporting Standard and adopted all accounting standard. Basically, we will not get any international accounting standard in future, but we will get International Financial Reporting Standard. And year after year, that type of standard can be vanished and just introduce financial reporting standard. So at this moment, what we can say, international financial, that means IFRS, all are the IFRS. And if we see financial statement 1, IS 1, para 10, they are clearly mentioned that the component of financial statement are 5. Though here we are seeing 4. That means a statement of comprehensive income, a statement of financial position, a statement of change in equity, a statement of cash flow. But another one is notes to the accounts. It's also the part of financial statement. Previously we know income statement is clearly all we know it, but income statement, its name is a statement of comprehensive income. All income including within this financial statement. And balance sheet, it is clearly we know, but its name is a statement of financial position. So it's defined only showing the position, a specific day. But income statement or a statement of comprehensive income is within a period. For example, January to December or July to June, a specific period's comprehensive income. But balance sheet, just a specific one day. What is the position of that which financial asset liability position is that. And a statement of retained earnings, previously it named, but it's changed in a statement of change in equity. And also we have the cash flow, a statement of cash flow. And that is statement of cash flow, a specific, we have the accounting standard IS 7. And a statement of cash flow prepared within a statement cash flow, there are 3 items: operating activity, investing activities, and financial activities. And also cash flow we are preparing in two methods. One is direct method, another is indirect method. And direct method is all receive payment accumulated, and indirect method is start from the balance of profit and loss account. So when we'll see the math, that would be clear later on. So we can say that we have 5 components of financial statement. One is a statement of comprehensive income, another is statement of financial position, a statement of change equity, a statement of cash flow, and notes to the accounts. And all are related with the income tax. Here, taxable income in the proportion of the company's income that is subject to income tax in according to tax law of the jurisdiction. And accounting profit and taxable income may differ due to the difference guidelines. So we'll see why accounting profit and tax profit differ, and that's why comes the deferred tax we will calculate later on. And if we see overview the financial statement here, we know the statement of financial position is the balance sheet, a statement of comprehensive income, the profit and loss account, a statement of cash flow. So what is this? So look here, a statement of financial position is the in business side operating asset and liability, investing asset and liability showing there, and financing side financing asset, financing liability, income tax, etc. And totally equity, show the equity. And a statement of comprehensive income, that means profit and loss account, how that means operating activities all are within that year, and how much tax have to pay or paid, disclose all everything with the statement of comprehensive income. And cash flow also is the combination of operating activity, financing activity, and investment activity. And if we see the quality characteristic by accounting information, the information we are inputting our financial statement, they have the specific quality. That quality, that means, look here, is the from that book. Also, qualitative characteristics would be the financial statement must be, or financial data must be understandability. It have the quality of understandability, is the specific quality, and it should be decision usefulness, and it must be relevant, and it have the that is reliability, data reliability. That is the primary quality, and is have the component of predictive value, feedback value, timeliness, verifiability, neutrality, and representational faithfulness should be within the financial data, and it is the component of financial data. And its secondary quality is it should be comparable, it should be consistent, and also constraint is cost effective constraint. That means we are always using the cost benefit analysis, and materiality constraint, that recognition, how much money we should recognize. So this is the qualitative characteristics of financial data. And if we see here, it's the information, that means cost benefit, understandability, usefulness, and its primary quality, what we have seen, and should be relevance. Relevance means make a difference in a decision. And reliability, that means it's faithfully represented. Comparability, we can compare with among the different entity, organization to organization, etc., industry to industry, and should be consistency. It means that allows comparison within a single entity from one accounting period to next, and that means consistency, how we presenting data, and next year also same way we should present data. But one thing, that if any wrong find out, that should be corrected immediately. And qualitative sets, primary qualities is timeless, secondary predictive value, feedback value, and etc. is the financial data quality. And if we see our balance sheet or statement of comparison, that means position, here's the if we see the accounting equation here, most of them we are in accounting proportion, so we know total asset equal to total liability and equity. So it is the total balance sheet, and income statement is the revenue, expense, and profit or loss is the fundamental thing, and a statement of cash flow, 3 items: operating, investing, and financing. And if we see that the summary, that means that summary comparison, income statement is show period of time, that is a specific period, January, December, or, and also we know it in our country, that was 2 years ago, NBR also through the budget, that was Finance Act, declared that our financial period of the company should be July to June for tax purpose. But banks, insurance, and financial institution, their financial period is January to December. So that period of time is mentioning in income statement, and balance sheet is a point of time, a specific point. Cash flow is a period of time. And why we prepare income statement? For understanding the profitability, loss or income, that is, etc. And why we prepare balance sheet? To know the financial position. And cash flow, that's been cash movement. How we measure it? We measure to the income statement revenue, expense, and profitability. And balance sheet we measure asset, liability, shareholders' equity. And cash flow, increase and decrease of cash. And a start point in the income statement, it should be revenue, and ending point net income or loss. The same way, balance sheet start from cash and closing retained earnings. Cash flow start from net income in the indirect method, and cash balance, closing balance, is the last point. So what is the relation that possess financial reporting? And here we see the business analysis valuation using financial statement. How we will evaluate it, we will analyze it, and when that need for analyze, for taking the right type of decision, management decision, and also sometimes we need for merger acquisition policy, corporate financing policy adoption, etc. That type of we need the valuation also. So financial statement analysis, how we would be analyzed, it have some process. Look here, if we see right side, so here what we need, we first identify what we have to calculate from that data, and that collect relevant data from the financial statement. Then we have to process data, for example, adjustment, common size, relation, etc., and analyze that, and we develop for our business purpose, and review and recommendation for next step. So this is the fundamental thing. And financial statement analysis is a method of reviewing, analyze a company's accounting report in order to that means understand the past performance, and understand for the future performance. So who use the financial statement? There are two groups. One are internal groups, another external. So internally, we are using for finance purpose, decision making purpose, human resource department used it, management used it, marketing department used it. Or external, this use the tax authority. External use the customer for the decision making, use the regulatory agency, and also that financial statement, that means audited financial statement, is the public document. And that's why, for example, the all listed company, they publish their financial statement for the investor, for decision making, or for the stakeholder also. But cost accounting, management report, or cost report, etc., not for the public. It's for internal use. But statutory accounts, statutory audited accounts is the public document. So here, use that document our creditors, investors, customers, the different types of agencies, regulatory agencies, etc. So at this moment we have different types of regulator. We have the FRC, Financial Reporting Council, is the supreme authority of financial the statutory audit, auditors, financial reporting, etc. And also we have the for the bank, they have the regulator, central bank. For the insurance, regulator is IDRA. Different types of regulator we have, and for government, that is for government bank, these the different types of regulator. Though is the bank is regulator of central bank, Ministry of Finance, Ministry of Financial Institution, Finance Division, different types of regulator. And day by day, this regulation is tightened, and that's why our lot of things happening at this moment through the digitalization, and we will discuss later on. Institute of Chartered Accountant of Bangladesh, ICAB, তারা নতুন ডকুমেন্টেশন ভেরিফিকেশন সিস্টেম চালু করেছে ডিসেম্বর 20 থেকে। সেখানে কোন ফার্মের অডিটরকে সেই জিনিসগুলো আপনি আইডেন্টিফাই করার সুযোগ আছে, এবং ওখানে রিপোর্ট হবে, একটা ভেরিফিকেশন নাম্বার থাকবে। ওই নাম্বারটা থাকা মানে হচ্ছে এটা অথেন্টিকেশন আছে, এবং ওইটা ভেরিফাই করার জন্য ব্যাংক থেকে শুরু করে যারা স্টেক হোল্ডার সবাইকে ইউজার আইডি পাসওয়ার্ড দেওয়া হচ্ছে। তার মানে একটা ভালো অবস্থানে আসছে, মানে আস্তে আস্তে সবকিছু কমপ্লায়েন্সে চলে আসতেছে। সো ইন ফিউচার উই হ্যাভ টু লিভ উইদিন দ্য কমপ্লায়েন্স। সো if we see here, there are different types of user in financial statement. Management use, owners they are using, investor use, creditor they also use financial statement, government, employees, customer, general public also use financial statement. So why they use it? Area of interest is seen here. Look here in the left side, number one, a shareholder or investor or owner. Why they use financial statement? Their main interest is know the profitability, financial position, future prospectus of the business continuity. So for this purpose, owners or stakeholder they are using financial statement. Why management use? Management use short-term and long-term solvency, liability of the concern, profitability in relation to the turnover and investment. Why use the supplier or creditor? They want to know financial position. They will be able to survive, or they will able to pay their bill or not. They should understand the profitability, short-term solvency, liquidity position, etc. And bank and lender, why use financial statement? Financial position, profitability, long. Here one thing that at this we know previously, one financial statement, one stakeholder they prepare for the banks, another for tax authority, another for the VAT authority also. Though tax VAT within the under the NBR, but some businessmen they produce different types of financial statements, and that's why NBR within the department, within the wings, they are sharing the financial statement of same entity. So it's also a revelation also. And another thing, NBR also verify the financial statement through the ICAB. So it's also a positive thing. And sometimes previously that same company submit a specific financial statement to the bank for lending money, and where we have seen lot of profit, there huge positive cash flow, but based on that financial statement, banks are taking decision and giving loan to the stakeholder. Same entity submit a report to the tax authority, there are occurring loss, and the same way. So that type of thing and future they will not be happen, because there are lot of work doing the authority at this moment. And not only that, NBR also is going for that means through the API they are going to take with the bank's account. So specific companies or person, their bank account within the bank, what are the transaction, they will follow up in future. Not at this moment, but at this moment they are working on it. And not only that, what you have money in your bank giving you the interest yearly basis 2 times after 6 months, that interest they deduct the tax. So that amount also including your through the NBR through the API, NBR include their within their server in future. And when we are going for we will go for, that means our return submission through the online, that bank data automatically come to the NBR server. So at this moment, what happening, you have 5 or 6 bank account. When you go for return submission, you only show 2 or 3 account, and you have a specific different types of income also, but you are not showing that. But in future, we will not be able to hide that type of account. All account should within the NBR server. So that type is also a positive thing. So this is that's why bank lender is using that, and also employees and trade union. Why they see profitability, financial position. Government agency, their interest is profitability, financial position, and growth. And researcher, they see the profitability, growth, financial position, future prospectus. So that's why financial statement are using in different stakeholders. Now come to our analysis. How we can analyze our financial statement? We can analyze different way. There are different method. There are different process. Sometimes it is the common thing, horizontal, vertical analysis, horizontal analysis, trend analysis. If you see that here, vertical, horizontal ratio analysis, we can say this way. We can different types of tool we are using. Comparative financial statement, and there are 2 types, horizontal analysis and vertical analysis. Sometimes we are using common size financial statement. Sometimes we are using trend analysis. Sometimes we are using ratio analysis. So this way we can analyze our financial statement for good decision making. That decision, what is the main feature? Horizontal analysis. What is this? This is the financial information is compared for 2 or more years for a single company. One single company, financial information is compared for 2 or more years. If we see here is this one, for example, here 2 years financial data. So what our analyzing that if base year this, so what the increase amount of the amount, for example, if year 2012, and what is the 13th position, current asset increase 75,000, and what is the percentage based on that base year? According to 9,45,000 is increased 7.9%. Same way, plant asset, how much increase? 1,67,500 is the 26.5% within the base year. Same way, intangible asset is reduced 2,500. So this way is the analysis of horizontal analysis. So what would be the decision making purpose? Look here saying that current asset increase 7.9%. So what we will see based on that data, for the management purpose, they will think that our current asset increase, that's mean that we are unable to manage the current asset. And current asset base means current asset is cash, our receivable, working capital, inventory, etc. Also, inventory have 3 types of inventory we have. One is material inventory, another is work in progress inventory, another is finished goods inventory. All are inventory, all related to the money. So here current asset management is not properly. because here 10,20,000 current asset is within the hand. It means that it's have some cost. So that type of decision here for analyzing. And if we see here the vertical analysis, so vertical analysis said that each item of a single financial statement is calculated as a percentage of total for a single company. Look here, if we see that this vertical one, so here if total asset is 100%, so what is the percentage of cash? What is the percentage of prepaid expense? So this way, here totally 100% asset, same way 100% liability. And compare here, here 13 and 14, 13 also 100%, 4,66,000 if we see the 100%. And same way in the year 2014, 5,24,000 is 100%. So here cash 6.3%, here 6%. So here increase in cash. And same way, if see the liability, accounts payable. So here payable is in the year 13, payable was 8.2% of total liability. But here payable is 7.8% in the year 14. So what is happening that here is thing that our payable reduce due to payment of amount. And same to receivable. If see here in asset side, accounts receivable, here it was 12%, but in this year 9.5%. It means that receive money. That means it is true that companies are finding that type of accounts people or CFO who fast receive and payment they delay or late payment make delay. So because cash management is a vital part. So here each and every item, each and every component need for decision making for the management. So that type of analysis we can say sometimes common size statement. That common size statement also is our vertical analysis also. And some trend analysis. It shows the trend where the company is going. That will ratio analysis another vital part.